On this episode, we talk about the crypto crash, the big short on Tesla, and is credit card debt declining? Welcome to Think at Heart. Welcome to Think at Heart. I'm Scott Goodfellow. This is Ben Hart.
Hello.
This is episode 17. Well, it's actually episode like 21 or something. I messed up the episodes a while back, so we'll get that straightened out eventually.
Yeah.
But excited to be here, Ben. Excited to be
Me
here.
too. Me
Such
too.
an interesting time in the world.
It really is.
We have a main topic to talk about. But before we do that, you're looking good. You got the vest on. You got a haircut going. Hey,
Feeling
it's looking good. Yeah.
First at-home COVID haircut. Look pretty good.
Looks pretty good. I'm over here. I got the COVID hair. I'm looking like Roseanne Barr from 1992. I don't know what's up with that. It's almost time to get one of those haircuts at home, I think. Or just wear a hat. Just wear a hat.
That's the alternative. You need like a fedora or something to put on there.
I don't know. It's bad. The forehead's getting bigger. The hair's getting longer.
Just
looking like a middle-aged. Looking like a
little
middle-aged
shiny.
I don't know. I know it is. Okay. Nobody wants to hear about our haircuts.
No.
All right. So before we get into that, we have to say you can find us on all social media platforms.
Yes.
The Heart Investment Group. We're heartinvestmentgroup.ca. And we also have our individuals. Ben likes to post mostly on LinkedIn.
Yep.
So that's great. I've started to do that more as well. So you can find us there. Please follow. And also like and subscribe to this page because that helps us as well.
That's it. Yeah.
Okay. Now that that's over with, the pain of that. Hey. What happened with crypto this week?
Holy cow.
I woke up one day. It's usually the first thing I do. And what do they tell you? The worst thing that you can do personally is wake up and look at your phone. I always look at my phone. It's like 5 a.m. and crypto's down 30%. I just stayed in bed the whole day. I called Ben and said, I can't make it in. Crypto's down 30%. What happened, Ben? What happened?
Yeah. Well, look, I mean, you've been asking for this. Like, we've been talking about this for weeks and maybe months. You're like, I haven't seen a big sell-off. Haven't lived through a big sell-off. You got your wish.
I know. It's true. I'm excited. I'm excited. I'm not going to say whether I did or I didn't because I don't think we're allowed to, but what do you do in big sell-offs typically?
Yeah, typically what you do in big sell-offs is you have to adjust. You got to make decisions, and typically it presents opportunities. And certainly I took action and made a few changes and adjustments. And I think it always presents opportunities. Like, this was a crash environment, and like this one was crypto. I mean, I've lived through many of these. We've had flash crashes over the last 5 years. I do remember. Certainly after Brexit, I remember very clearly. And I had cash in clients' portfolios, and the market cratered, but only for like 3 hours on the Friday morning. The vote was on Thursday night. I remember waking up early on the Friday morning, and market cratered. Like, bank stocks are down 25% at the open. And so, these kind of events happen. Then August, a couple years ago, we had similar thing. And about 6 years ago as well, I remember like stocks gap down, 25, 30%, but within the few hours, they're right back up, maybe down 10, but still, like, these events happen. And so everyone, I think, came into this and like, oh my God, we've never seen this before. Crypto must be a joke. All the gold bugs are rejoicing, like, we're so smart. You guys are stupid. So it was definitely an interesting morning.
Yeah. Those, I can't even look at Twitter and social media because of those, right? Like, everybody like, I told you so. Crypto is not a thing, and it's down 30%. But in fairness, I like to keep it. Well, I don't actually I'm quite biased normally about, especially about crypto, but I'm sure we, nothing worse than people banging their chests saying it's the only thing on the way up too, right? Like, we tend to be more on that side, I think, than anything, but yeah, nothing more annoying than, people saying, I told you so.
Yeah, look, I mean, I think so. Then the question when something like this happens is, anything. And I remember in 2011, we were in the gold run, right? Everyone was like, gold's going to 10,000. And so, everyone was certain that this was going to happen. Fed's printing money, central banks are piling, cutting rates. We're going to have rampant inflation. Gold's going to be the only asset you want to own. And that was the peak of the market. Like gold then sold off for 5 years.
Yeah.
Like we had a downtrend bear market for 5 years in gold. So, you definitely aren't one way only. And so the question is this the top? I think the answer is no. I think it's an intermediate top. And, we talked offline about, Coinbase was the peak of Bitcoin that day. And so, I think that was in hindsight, a sell the news event. I've been trimming Bitcoin on the way up, as you know, over the last 6 months. But I thought we had more upside before we saw this kind of event. And so I did anticipate we'd get into the 70s before we saw this kind of material sell-off. But it was certainly a wake up to anyone that has anyone that are hodlers. They want to hold forever.
Yeah. I mean, I was doing a little research before we got on here, and I noticed that this is the 7th correction of 30% or more since 2017. So like in 4 years, right? So what does that tell us? I mean, it tells us we shouldn't be surprised. That's for sure, right? But what does it really tell us in the bigger picture?
Yeah, so I think it tells us a number of things. Like anyone that hates it or that I have conversations with around, this is a diversifier in portfolios, whether it's executives at banks or whether it's portfolio managers that don't understand it, don't want to learn about it, don't want to talk about it. This is their argument. Like it's too volatile. That's their argument. And so, it didn't surprise anybody that we had volatility. Obviously, as you know, Bitcoin's still up 260% in the past 12 months, even with the sell-off. People are scared about volatility, but in an upward trending asset class that can grow at 100+% a year potentially, you're going to have volatile sell-offs. But the interesting thing that I think we need to think about, because we talk about the network effect, right? We think that this is actually going to change finance and potentially technology in general. Amazon's basically had the same volatility profile since it's existed. You get giant sell-offs, and if you track Amazon and how that traded through since inception to today, you get a similar vol profile. It's slowed down now as it's gotten materially bigger, but certainly if you compare them for those first 12 years of existence, you'd have a similar volatility profile. And so, now we sit here, like if I ask you, would you think twice about investing in Amazon? Well, probably not, right?
No, definitely not. Yeah, definitely not.
Yeah. So,
well, go ahead.
Yeah, so I think that it's not certainly not fun to live through it. It certainly teaches you that it's still there, volatility is still there, and it's something to be conscious of. And so if you're building positions, you have to take that into account in portfolios. How much can we handle? How much can people handle from a fluctuation perspective? Is there anything you can do to hedge it in future, or did you just want to take profits and sell it? So it certainly takes some thinking into what you do with that in your portfolio, but if you have a 5% weighting in it and 95% in other assets, a big swing like this shouldn't materially damage the portfolio. And again, if you're not leveraged, you can stay with it. And so that's the point. And the people that got hurt and crushed yesterday, which we can talk about in a sec, are the ones that were leveraged. Like it's leverage that put the pressure on.
Yeah, for sure.
Yeah.
I mean, we mostly only been talking about Bitcoin specifically, right? But as far as the crypto overall and some of the other ones, what else did you see out there?
Yeah, so the one thing I wouldn't mind putting the slide up here. It's just kind of a highlight of some of the things that I saw that was more, I think, interesting for me from the perspective that I think that people didn't pay enough attention to this, and I think that we are, we're looking at potentially a new system. Just let me know if you can see that still.
Yep.
Yeah. So, I mean, we went through the biggest freak shock event that we've seen since DeFi's really existed. So I know crypto and Bitcoin and Ethereum and some of the other things were under pressure. But I think one of the things that people have complained about is the risk, right? What's the risk? What's the risk of the system? What's going to happen? And so, these were some of the things that stood out yesterday for me was, Uniswap is a place that processes crypto transactions, not just Bitcoin. And so Uniswap processed more transactions than NASDAQ yesterday. And so, people, I think, still don't understand the technology, and we're still learning about it as well. But this is the first real test on that digital finance and how they work together. And DeFi, these are some of the highlights, that uses 72,000 liquidity pools. It's a lot more than a typical fund or ETF would use when they're looking at the portfolios. And so, one of the things that really jumped out at me, we've been talking about this a little bit more too, right, is that person in the middle, like Brian mentioned last week in our conversation. He's like, the middle people are the ones that should be thinking about what could potentially happen, because this whole system runs with computer code. Not a single person in the middle of it sitting in dealing with these transactions, nothing getting slowed down by somebody calling you, Scott, and saying, hey, Scott, can you move my Bitcoin position? Then you got to go to the computer or call a trader, make that trade and transaction, all the while you're having obviously a lot of swings in price and potential risk. And the other thing in the previous shocks in equity markets is there was typically system issues, right? So the flash crash of a couple of years ago of August, we had a system meltdown. Trades stopped, like trading stopped for a while. A bunch of trades got busted and reset. Yesterday through that whole sell-off, there was none of that. And to the point about liquidity and margin and leverage, 845,000 traders are on margin. They basically got sold out and liquidated out of the positions because they were smart contracts. And so again, you hit this break level. When we hit that break level, you're exited from the position, and that really de-risks the market maker from the perspective is you can't go over margin because we put this in place, and we hit these levels, you're out. And so I thought it was a really interesting test for what people kind of compare. Does DeFi exist? Is it here? Is it going to stay? Is the technology sound? Yesterday was a really important test that says, yeah, it works.
Yeah. That's an amazing point, and I don't know how you can argue against that, right? And there's a lot of people that do. Like, they don't believe that's going to happen.
Yeah.
But we clearly have the technology to do that today, right?
Yeah.
We just need that mass adoption to make it come to life, which is going to happen. you know? So I don't like what people just say it's not going to happen, but what are some of the arguments against that? Have you heard any? I can't think of a rational one in my head right now that somebody would say that's not going to happen.
Yeah. I talked to a friend today who was at an event yesterday where the CEO of one of the big banks was speaking. And somebody called them out and said, hey, what do you think of DeFi? And what do you think of the bank's role in it, basically, was, I guess, how the question was teed up. And he answered it from the perspective of, well, people are always going to want to deal with banks. They're safe. They trust the banks. They're always going to want to deal with us. That was the answer. So,
yeah, well, that guy won't be around for that anyway. But, it's tricky.
I don't think there's a easy answer. I really don't. I think that the challenge is kind of opening your eyes and wanting to educate yourself to what's coming. And most people don't want to see it because to the point, we just had this huge amount of volume yesterday in trading. Nobody touched it. Like, yeah, there were some people, they needed to program the code. Like, there was people to do it, but there was like a tenth of what is needed today. Like, you want to put a trade in even right now, like a stock trade. You still deal with people, still somebody pushing the button, setting the programs. If you want to go and loan your money out, like you got to find a way to do that. There's not an easy way for you right now to say, I want to make more than 60 basis points on my cash. Well, now there's vehicles where you can lend out your crypto. You may make, right? So you lend out your US dollars. And so I think people it's hard because it's so foreign, but you need to educate yourself in order to get comfortable with it.
Yeah, and I think it's all driven off fear, right? People fearing for their jobs and, they don't want to let it in because, it makes me obsolete. But here, like, we're a perfect example of that. We're not afraid of it. We're talking about it, right? Yeah. And we sit in the middle, and we are with some of those people. But I've seen this before in real estate. I don't know if I've mentioned it on here, but I've certainly mentioned it to you before, right? When the MLS first came out, they said, that's it for realtors because now everybody can put their stuff online, and it doesn't matter if you're a realtor, and it'll save the commission. It really hasn't changed. Well, sorry, it's changed that industry a ton. But the ones that were successful were the ones that could, embrace the technology, figure out how they could bring more value using that technology, and pivot and be the first to market. And that's right. The way people have to look at it. Because as much as you want things to stay the same, and we could point to any industry, right? It doesn't matter because, at some point somebody was the last person ever to buy a team of horses before the car was invented. You know what I mean? So there's always going to be innovation at every level, right? You just got to figure out how to be the first one there.
Well, that's it. I mean, I think that the culture, unfortunately, like I've obviously worked at a number of institutions, but one of them that I worked at in my past, they said, we'll be the second one to adopt it once it gets started. So, I think it's going to take some guts. I mean, I read article that one of the Globe and Mail, I can't think of her name right now, wrote about the CEO of the OSC. And he was the first one to support Bitcoin ETFs in the world. Mm-hmm. And so, I mean, this guy has a ton of guts to come out and stand up against the SEC in the U.S., who's a big brother, and says, we're coming to market with this. Like, we think it was legitimate. We think that it has a rightful place in the market. We don't decide what is, what people want or don't want. That's not our job. Our job's to say, is this an asset class? And then, do we think it makes sense? Is there enough liquidity? Is there enough safety and security? And they approved it. So, I mean, that guy had a ton of guts to do that. And so, I think it's that kind of individual that that you need to kind of push ahead and forge forward. And so they're coming through the system in certain places, but certainly taking its time.
Yeah, definitely. Well, it's good. It's definitely going to get there. One more point on Bitcoin is that, and the kind of the reason why I picked up, or I brought up the other cryptos, were I heard a take today that, comparing, if or one of the takes was, could Ethereum take over Bitcoin, or could Bitcoin become obsolete because of all these other cryptos and the people are starting to understand how the technology works and whatnot, and could Bitcoin be the AOL of the internet, right? Being AOL came out first, they're the first one to kind of launch that user-based platform. And then everybody, just more innovative, younger movers came in and innovated it to the point where they were no longer a factor, right?
Yeah.
So people are saying that maybe Bitcoin's like that. What do you think about that?
Yeah, so possibly, I mean, is the answer. I think that, presently they play separate roles, right? Bitcoin in the community is a store of value, and so it's that kind of asset, where Ethereum would be like a hybrid asset right now, right? It would be a coin, but it would also be a platform in which people could build on top of. So I guess we've seen some of the brightest, like you listen to Raoul Pal from Real Vision talk about his asset allocation, right? And he's I believe 25% Bitcoin, 55% Ethereum, and then a basket for the remainder. So he's been bang on along the way here, and certainly a leader in the space as he talks about this evolution that's coming and the future of finance. So he certainly sees something. So I wouldn't second guess that. But my view is still that, maybe if it continues to have that store of value quality and it gets kind of integrated into the system where, the banks start taking it as deposit, you can loan against it, the hedge funds are allowed to use it as collateral. Like, I think if you get that kind of thing, which gold has presently today, then it probably holds its value. But if you don't get that adoption where the banks are willing to take it as collateral and things like that, then I think it'd be challenged. But obviously Ethereum, which we had that great conversation last week, and you continue to learn about it. There's more innovations happening around Ethereum right now than Bitcoin's having.
Gotcha. Yeah, no, I agree with that take as well. I do think it's more of a store of value, and I don't know where it's going to settle, but
sure.
Yeah. But you see Cathie Wood coming out this week from ARC saying she still thinks it's going to go to 500,000.
Yeah.
I don't think she put a time frame on that, and it could, I guess, but she still believes in it. So who knows?
Yeah. So I think there's 9,000 cryptocurrencies out there now. Yeah. So probably 8,990 die. Mm-hmm. Over time. So I would say that a lot of those ones probably don't make it through. The interesting thing that we learn about all the time and every day is that it's evolving at such pace that you got to kind of stay on top of it and see where things are going. But yeah, I saw Cathie's price target there. Yeah.
I mean, there's so many of them. I mean, it's not any different than any other asset class either, right? There's tons of companies that come out and fail, right? It's speaking of that, I'd like to take this time to announce the launch of my own coin, Scott Coin, that's available on Coinbase. And no, I'm kidding. It's not actually a thing. But hey, it sounds like a great idea. I just came up with it right now. Scott Coin to the moon. Hey, I'll start a hashtag with that. We'll get it going just like Doge. Except Elon's got a bit bigger community than I do.
Slightly.
Exactly. Okay, anything else on crypto, or do we want to Do you want to move on to other things, or you got anything else?
Yeah, no, I think
Charts or anything?
no, I think certainly got seen lots of things come through. The points I wanted to make, though, I think was the quality and how well the system handled the sell-off. And so Jim Bianco is the one that flagged it and really has been talking about that. So he's put up some great information, and I'd look at his Twitter feed if you're looking to dig into a bit more detail, because he's really done a good job. And we talk about this kind of parallel finance world, and so I know most people are stuck in this crypto maze, but what's happening is a parallel finance world is being built right now, and it held a very good test of its quality and integrity yesterday. So that'll be interesting. Last piece before we leave crypto is just really Janet Yellen announced today that any crypto transactions over 10,000 are going to potentially need to be reported. It's news because it's Janet Yellen speaking, but if you're a maximalist, you probably don't like this because you want to be anti everything. But if you're kind of a realist and you want adoption, then it only makes sense, right? If I send you a $25,000 wire transfer, somebody looks at that. Where'd it come from? Who sent it? Why? So anytime you do those size of transactions right now, people look at it. Whether you get a call or a query or not, so be it. But it only makes sense if you want adoption.
Yeah, for sure.
Yeah.
Yeah, that's a great point. All right, moving on. I saw a story here and I thought it was interesting. That Michael Burry, from The Big Short, the crazy guy there that listened to heavy metal music and was.
I love him.
Yeah, he was awesome. Made billions of dollars on the real estate crash in the U.S.
Yep.
Anyway, when was it? A few months ago, I think he shorted. Well, he bought $500 million worth of puts on Tesla, right?
Yeah.
It's just been a massive battle with Elon Musk, and it looked like he was wrong for a few months there, but now it's looking like he's right. Yeah. What do you think? What's his reasoning behind that, do you think?
Yeah, I've read some of the research that he's published on it. He talks about it. I think he thinks it's a zero. So I wouldn't. I certainly wouldn't say that he's wrong, because I don't know. This guy saw the subprime housing crash before anybody did. This guy, whatever, has a brilliant mind. Obviously, he can identify and see things that other people can't. And so, is he going to be right this time? I guess we'll find out. But Tesla's done a good job of having a great salesman leading the company. They haven't made money ever. I know the earnings numbers look like they do, but it's because they sell their carbon credits. If they didn't have their carbon credits, they wouldn't make money. And they wouldn't be on the S&P, because you need to have positive earnings in order to get added to the S&P. So he's been a great salesman. So can he sustain it? Maybe. I think interest rates at zero with the central bank protecting pretty much every leveraged company, I would say it'd be pretty hard for it to go to zero, even if you don't like the company, even if you think it's crappy. I'd say it'd be pretty hard to go in that direction. But yeah, he's been right so far. I think one of the things which Raul's talked about too is VW's coming for electric cars, right? Yeah. Right. So if some of these big car companies are saying we're going after you, Tesla,
I think that's what's going to happen, though, right? I think Musk has done a good job of actually dragging that entire industry into electric cars, right? He was kind of. And he's benefited and profited from being the first mover on that, but now everybody's all in on it. Ford announced they're rolling out their electric trucks, right, which is their biggest segment. Their F-150s, right? Those are going to be all electric, right? Yeah. So, and I do think these guys are going to throw huge money behind it. Not that Elon can't do that, but I just think these companies have been doing it for decades, building cars for decades, are going to do it way better, way more efficient. They're actually going to be profitable, and they're going to eat his lunch. Like you said, whether he goes to zero or not, or, I actually think it'll, something else will come out that would cause that, like he's done something shady or something like that, but, which wouldn't surprise me. But yeah, no, I think you're right.
Yeah. Yeah. I mean, I think Maburi thinks that the numbers are like the books are cooked. And so, I think he's outwardly cooked the books. So, the likelihood that the SEC does anything or there's anything material that people don't already know that's happened is surprising to me. But I think we'll see. Yeah.
And he's shown in the past he gets bored with his projects, right?
Yeah.
I mean, and he moves on, right? And he's a big thinker, and the world needs him. I'm not an Elon Musk hater at all, right? Yeah. Like, look what he did with PayPal, you know? But yeah, so, but I do think Michael Burry, I said this like 6 months ago when when you and I were, I said I'd be looking at doing that too, but yeah.
It's crushed a lot of people trying to short it over the last 5 years, right? Lots of people have gone out with their bear case on it, trying to short it, and they've been crushed and just run over. So, he's smart from the perspective is he's not outright shorted. He owns puts. So he's got a maximum amount that he can lose. Where if you're shorted, right? Like if it goes up forever, you got to meet your margin calls on the way up. If you can't meet your margin calls, you're going to get squeezed out of it at some point.
Yeah, exactly.
Yeah.
Okay.
Just before we leave that one, I mean, I think that the kind of the EV revolution is going to play kind of a major part in assets, right? What do you want to own through that? And obviously, if energy is going out the window and people aren't going to build combustion engines anymore, then you probably don't want to be a long-term holder of energy companies.
Right.
Yeah. And
what does that do to the oil companies?
So I think the ones that don't pivot are going to die. Yeah. The big ones will survive, of course. They'll pick up assets, and I don't think energy goes completely away. But some of the bigger companies are trying to see how they adjust. Like, should we do some kind of renewable resources? Should we maybe acquire some wind power companies? Like, should we shift what we're doing? But I think it'll have a major slowdown, like I think a cyclical slowdown. And but what it does also to another commodity like copper, you need 40% more copper in EVs than you need in combustion cars. So copper probably has a long-term uptrend ahead if we're going in this direction. Yeah.
Interesting. You just got a new car. How come you didn't get an electric vehicle?
Yeah, I haven't drank the Kool-Aid. I like my combustion engine.
I do too, but I think I'm gonna get one. Like, I don't know what or when I'm gonna do that, but I think I gotta give it a go.
Yeah, you should.
Just because I think that's just gonna be the way it goes, right? So I may as well get in early. I like to be an early mover, Ben. You know that. Although I think at this stage I wouldn't be considered as an early mover, right? If I owned a Prius, 10 years ago or however long ago it was.
Could go 25 kilometers without a charge, yeah.
Hey, could you picture me folding myself into a Prius? Hey?
Looking good.
Throwing the kids' hockey equipment in that weird hatchback that it has. What a weird car that is. Anyway.
Yeah.
Okay, moving on.
Yeah.
Let's talk about, here's another interesting thing. I thought this was amazing. Credit card debt, right?
Yeah.
Down 14%.
Yeah.
Over last year.
Yeah.
And credit card companies are reeling. I guess this is costing them billions of dollars. That is debt. People are actually paying off their debt. And nobody knows why. Right?
Yeah. Yeah.
Why are people doing this? Why is that happening?
People are sitting at home. I mean, I think I told you the story too before we came on here. Klein was mentioning to me they run a natural gas company, and they said like the first time in 35 years people are paying their bills on time. And so, I mean, I don't know what the simple answer is, but I think part of the answer is that people are sitting at home. They can't do anything, and a lot of them are getting paid more than they got paid when they were working. And so they're paying off their debt, trying to reduce their debt. And so I think that's a major part in it. And so I think definitely in the U.S., you have 21 states over the next couple of weeks that are pulling back on the pokey. Or the whatever they call it down there, so they're pulling back on the unemployment, and I think that number's probably going to change. But some people that look at the other side of this, they'll say, well, this is pent up demand, right? So if balances have been coming down, you get the consumer who's pent up, just ready to spend. Maybe you get that final wave of push into consumption before there's a realization that the income's going to drop as well. So you probably get some of that at least over the next, we'll call it 30 to 90 days.
I guess the credit card companies are not happy with it. They're putting what one company, I think it was a U.S. credit card company, mailed out 280 million credit cards or something like that, and to try to boost, like those free tester one type things.
Yeah.
And American Express, Amex spent $1 billion in marketing in the first quarter because they're trying to get this business back. Right?
Yeah.
So they're like begging people to borrow money.
Yeah.
Right? Isn't that always the way? Hey, they'll always give it to you when you don't need it.
Yeah, exactly.
Right.
Yeah, I mean, one way for them to get a pile of money is say, hey, we're going to give you 12 months at 5%, and I'll tell you what, you're going to get a huge influx. Right? How many people are going to leave their MasterCard to go to Amex if your rate goes from 20 to 5?
Yeah, that's true.
Right.
Yeah,
so we've seen rates climbing, like their rates have been climbing for decades. And so at, 20%, which is standard today, maybe they're going to have to give on that. Like if they want people to come back, maybe they're going to have to work on that. Because as rates went down, like for traditional lending, their rates have been going up. So, at some point, the consumer is going to say, like, I'm out, or a competitor's going to come. And,
Well, I wonder how much of it, too, like the use of, now they have like the debit credit cards, too, right? Like, I wonder how much of it's that, too, right? Like, you used to have a credit card to rent a hotel room and, rent a car and do those types of things. Buy stuff online. You don't have to do any of that anymore. Like, it's all just directly connected to your bank. Yeah. So if you have the money, right, then you don't have to put that on your credit card. I wonder how much of it's that. Probably a bit.
I would say it's some of that. Yeah.
Yeah, for sure. I know I do that differently than I used to, for sure. Right? Used to have that credit card, and now I barely ever use the credit card. Just comes right out of the bank.
Yeah. Amazon, you can do the Visa debit card.
Yeah.
Yeah.
For sure. Makes a lot of sense.
Yeah. So I think people that have cash are trying to pay down their debt at this point. So
I like it.
It's an interesting stat.
Yeah, interesting.
Yeah.
You had a couple more charts, didn't you? Did you have a couple more charts?
Nothing I wanted to bring out today. I know we covered a bunch of things last week. We didn't want to go through each of those. I mean, I suppose I could bring that up because we had on the call last week, right? I had shown a couple of things that we've gone through.
Right. You don't have to. I could have sworn you had like 3 charts, but maybe it's blending together. Okay. Do you have anything else you want to talk about?
I don't think so. I mean, I guess the last one maybe that I would touch on is really it's been interesting to see Janet Yellen now has come back and she's in her new role as Secretary Treasurer. And it's very ironic that she piled all this money into the system, put all this debt on, made the economy kind of over leveraged with debt. And now she's on the other side saying, we need tax revenue. We need more money. We need to, she's the one, she's not the only one, but she's a contributor to the debt levels that the U.S. has. And now they're coming out with, we need more tax revenue. And so, she's proposed this global corporate tax, flat 15% minimum global corporate tax. It looks, from my perspective, it looks weak. Why is the U.S. going to go to the rest of the world and say, hey, we don't like how you're playing over there. You're offering a preferential tax rate. That's hurting us. You think the rest of the world is going to go back to her and say, yeah, you know what, you're right. Let's have an even playing field because you've been kicking our butts now for decades and we want to give you a break. I'd say that'd be pretty surprising if that happens.
Yeah. I find that you talk about Janet Yellen a lot. Is there a reason for that, Ben? Or follower? Yeah. I'm not saying anything.
Hey,
I'm not saying anything.
Alan Greenspan was the guy that started it all, but I'm trying to keep it relevant for people that are recently understanding who these people are.
Hey, man, I'm just pointing out the obvious. You like who you like. That's all I have to say. Okay, well, that being said, that's it. Episode 17, Think at Heart. I'm Scott Goodfellow. That's Ben Hart. We'll see you next time.
Goodbye.